Into the charts here. YouTube, good morning as well. A little housekeeping for the YouTube people. Do keep in mind, I am only paying attention to the main chat where in the Bullish Bears Discord here. So make sure that if you're on YouTube, you go on down to the description, you click on that link, and you come over into the Discord channel so that you can get the full suite of everything that we're doing throughout the day. When it comes to working either futures, equities, options, FX, we have a full suite of people that are working all different facets of the market. So check out that description below and come on in. I will cut the YouTube stream at 9:30. So if you want to see how things are worked during the market, you can only do that there in the main chat with us, and you get to see the full live stream. As far as for the people that are in the Discord seeing the full live stream here, do not be afraid to unmute yourself. If you have questions, feel more than free to ask those or type them in the main chat. And I am keeping eyes over there on the main chat as well. So either is fine for me. Let's go ahead and get into it for what we are seeing for the day here. First things first, we're going to clean our charts off, get them nice and clean. Let's go ahead and go over the data that's popping up for today. We can see that we got crude oil at 10:30, but before that, we had mortgage numbers coming through here. We can see, what do we got? We're starting to have a little bit of weakening here, which, okay, could be good overall. But when we're seeing manufacturing production for UK here, we do have to keep in mind global trade. Whether you're trading equities, penny stocks, if you're trading futures, you need to keep in mind that it all works together. So it is important to keep really the top five in there. So you're going to want to keep track of Japan. You're going to want to keep track of broader Europe, UK. You're going to want to keep track of US numbers, obvious. Well, Canada, you want to keep track of that. And then you also want to keep track on Latin America broadly, because a lot of the agricultural goods for the world actually come out of Latin America. So if there's something that's going on either with shipping routes, maybe there's some political stuff going on, that is something to keep abreast of as you're working within your longer term trades, but also something that could give reactionary movements for the day. Moving further into the day, though, after the oil report, we only have the bill auctions here. So unless you're working the bond market, not going to have a huge effect on what we're seeing within the markets themselves. Okay, so good stuff. Alrighty, so we're going to be looking at the NQ to begin with. We're going to see here, again, we always work on a top-down approach here. First things first, where was yesterday's high and low on the NQ? We're going to go ahead and mark that out. Previous day high, previous day low. One there, and one there. Okay, now we want to bring ourselves, now you can always mark these as well. PDL for previous day low, and click. PDH for previous day's high. Again, these are points of magnetism that when price action is coming to it, it is going to react at these areas. But even more so, if you're entering price structure down here, this is the next area it could come to. So, and then if you're shorting as well, this would be your target profit area on that. All right, let's go ahead and bring ourselves down to the hourly here. We want to look at our pre-market session, and we want to be able to look at primarily the London session as well, as besides the New York markets, that is the highest influx of price action. You can see right through here, that previous day high moved. That previous day high needs to be right there. Cool. Because that is our previous day's high. Again, that's why you always want to make sure you check. Make sure you got what you got. Okay. For me, the green is my optimal London session here. So we do see the London high has already been swept. London low taken out. So we're going to mark that out. Then that low right in there. Asian session low as well has been hit. Marking out Asian session low. So we are seeing some bearishness come through. Now, we did have some news about an hour ago. That was more of dramatic news than it is like, okay, they're actually going to do anything. But Putin did come out and say, technically, we are ready for nuclear war. Not a cool thing, man. That's not a cool thing to tweet, to say out. You know, it happens. It has effects. And it's not that it's threatening or anything like that, but it's like, hey, you know, we are ready. They're not saying they're going to do anything, but there are people that will perceive that as a threat. And again, the market is all about what? Perception of information. So as we look further into what's going on with here, right now this price action, thanks to the cycle being complete here, we are seeing some bearishness on the NQ. So how do we mark this out for today's movements? Well, we can see right in here on the hourly, that was a tweezer bottom right there. We have a little bit of hesitancy here at 18,420. We can see some structure was set up there on the candles. So that would be an area that I would be keeping an eye on. Would be that 18,420 here. Yes, I understand that price is already wicked below it, but that's the area I would look at an accelerator for a continued down move. Now, let's drop ourselves down to a 5-minute or a 15-minute. You can do either. Looking here at the price action, we have our lows, Asian session low. This is looking weak. We are below our 21. Okay, so the idea for this is that if we break below, let's see, if we break below here, okay, if we break below there, this area here is setting us up for a double bottom scenario. So what we want to see is that if price action is below 18,412, 18,412, 18,410, and there we get a closing print below that, we're going to be looking for the 2-to-1 zone on this. Now we can see that price action is reacting right up here, Asian session lows, that morning channel low right in here. They tried to break out, didn't work. We had the consolidation, brought its way down, second consolidation here. They've put in a base, okay? So one or two things are gonna happen. At the bell, it'll get enough acceleration, it'll punch higher, they'll chop a little bit, and then it'll move to the top of this cycle, or we will sell off, we'll come right down to here, we'll chop a little bit for the market to make a decision, and then we will continue lower. Now, we always set up a 1 to 2 zone. That way we have an idea, okay, if this is our key area, where is the maximum move we can reasonably suspect? Now, we could absolutely go much further below that. We could end up going down here into these previous days' lows, but this is where we're gonna start to see some scale off from this previous channel working area. Okay, so that's why we want to have that area set up. Now, if you say to yourself, hey, that's 31 points, that's too much risk for me, then you got too much size on, because that's natural risk of the market. Okay, and that's something you got to keep in mind, is that no matter how much you want to be part of something on there, the natural risk of the market will always take precedent over what your opinion of risk is. So, you know, while it's not a nice thing, that's the reality of it. Now, for a bullish side of things, how would my risk be set up? Well, if we have this hypothetical consolidation range, let me get my drawing tool. There we go, rectangle. That range would look something about like this, okay? So for that particular scenario, I would be looking for a long trade above this consolidation. Okay, we're going to say it's right there, roughly. All right, so if I'm looking for a completion of that cycle at the top there, that means my stop is going to be about right there, the low of that consolidation. See how I have that? So that's what you want to keep an eye on, is what is your risk-reward scenarios. Now, if you believe it's going to have more oomph, you believe it's going to be a melt day, something like that, one way or the other, put in a trailing stop. Throw in a trailing stop for what you're expecting. My personal opinion on a trailing stop, it should be somewhere around 1.25 to 1.5 ATR of whatever time frame you're on. So if you're on a 5-minute, right now the NQ ATR is 10 points, 10.5 points. So a stop would be what? A trailing stop would be 15 points on this. Now, for those unfamiliar with what a trailing stop is, all you have to do, one, go to the Bullish Bears website, type in the word trailing stop, and you'll see we got plenty of articles on top of that. But For those unaware, real quick on that, a trailing stop is when you enter your price action. As price makes its way up, there is a stop order below it that makes its way up along with that. Now, it is always progressive, not regressive. If you had a regressive stop, well, you'd never actually get stopped out. So keep that in mind. But as price action makes its way up, that stop makes its way up as well. And then once price finally reverts back, boom, you're out of your order. So keep that in mind. You do not want to set those too tight, because if you're set inside of the natural movement, then you'll just be stopped out in like the next 1 or 2 candles. So, alrighty, with that being said, let's go ahead and hop over to NVDA. There's been a lot of talk on NVDA. Looking here, so NVIDIA. Okay, what are we seeing here on NVIDIA? Nice sell-off movement through here. Nice consolidation right in here, bringing their sales back up to a new set of consolidation here. This actually is a cup and handle. Okay. So get my finger. So start of the cup is actually right here. So that is the start of your cup. End of the cup. Right there. Okay, start, end. See the big curve right in here? So that's your sell side, buy side curve. We now have the handle right through here, and they're actually breaking out on NVIDIA for this. So as the day starts, we want to see how that gap up occurs. Like what I'm seeing. So what I would look for on this cup and handle is a breakout retest scenario. What we want to see is price to it. More than likely, it's going to get a little bit of an acceleration up quickly, and then we want to see it come back into this topping area. Okay, now it may not come exactly back to, what is that, 912. It may not come exactly back to that, but you want it within like a 10 to 15 cent zone of that area as it's making its way into that 912/913 area. That is where you start to get a long position and start to accumulate. And you want to, it gets a little bit of a move up, it comes down into this region right in here. Once you see that next strong bullish candle on there, that's your entry. So you want to see down, bullish candle come in, and then it gets that play up. Now, if you need a little bit more confidence in the move, you can always wait for whatever the sellback candle is once it is above that area. Okay, so that's the two different ways to play a cup and handle. Clear those off real quick. YouTube, I'm going to have to cut you guys and gals off here. I hope you are doing well today. Make sure to check out that description below to come hang out in the community, see what we've got going on, and as we continue to work in the market. I'm going to hop back over to the NQ, but first things first, YouTube, wish you a wonderful day. Check out the description below, and as always, remember, your trades are in the history. I'll see you around.